Hey guys, hope you're all doing well. Welcome back to Mark's Stock Review. Today's video is going to be on Skillz, waiting to go public via the Flying Eagle SPAC. I'm going to go over a brief overview of the company, some growth in numbers, what I call the win-win-win business model, and finally some risks. And for those of you new to this channel, I do upload 2 to 3 new videos per week, so if you find this video helpful, please consider subscribing. And one more thing before we get into Skillz, I just wanted to say thank you for helping me reach 1,000 subscribers. I really appreciate your support. Full disclosure, I do own shares of Flying Eagle. I decided to buy 10 shares today, but only buying one at a time and only buying more shares if it lowered my cost basis. And as you can see here, it did make a difference. I started the trade with a $12.45 cost basis, but ended the day with a $12.22 cost basis. And I don't always buy just one share at a time, but when I start a new position, my initial share purchase is always a very small percentage of the overall shares that I want to put into the stock. And then generally speaking, I only buy more shares if it lowers my new calculated cost basis. Okay, let's talk about Skillz. In short, they are a mobile video game esports platform where gamers compete while the game developers share their revenue with Skillz. Skillz connects players for fun, fair, competitive games, and they have billions of casual esport tournaments globally. Millions of prizes are handed out each month. Skillz help developers create lucrative franchises by leveraging their patent technology. So from my point of view, they're more of a software company that happens to be in the gaming industry. After the transaction with Flying Eagle, they're going to have a $3.5 billion implied equity valuation, which is going to be about a 6.3 times projected 2022 revenue. It's also great to see that they're going to have approximately $250 million post the transaction, so they're going to be able to have that money for domestic and international growth, marketing, and for general working capital. Also, two positives that really jumped out at me while researching this company was that their investors are going to be including Wellington, Fidelity, and Franklin Templeton. And more importantly, they have a 24-month lockup period post the transaction. So for me, that is definitely a positive, especially for the investors during the price discovery period. And a little bit more on numbers before we get to the business model. Skillz now has 2.7 billion gamers playing monthly and 10 million developers globally. And per the Skillz management, the video games esports sector is expected to be at $150 billion by 2025, and projected 2022 revenue should be around $555 million. On to what I call the win-win-win business model, which involves Skillz, the developers, and the users. Let's talk about the players first. The players compete for money in head-to-head matches, live tournaments, charity events, and leagues. Money is not exchanged between the players and the developers, such as in-app purchases, and that's huge, at least in my opinion, because it avoids this relationship, which can often create animosity. And I actually know from personal experience with game developers slowly increasing in-app purchases in order to keep up with a game. So to me, that's very important. And while we're speaking about players winning, get this, the number one player in the world from the Skillz platform won $3.96 million in 2019. So that just gives you a sense of where this industry is going. The second part of this win-win-win business model is that developers also win. Through Skillz, developers have direct access to their 2.3 million active monthly users. Players will determine their success. However, even if they are not instantly successful, they can begin revenue sharing even if their game does not end up being a home run. Additionally, through Skillz, they can monitor and update their games in real time. Furthermore, developers have access to Skillz loyalty programs, the monetization and registration services, the data interface, and player matching and fraud protections. And finally, Skillz wins. They have recurring revenue. Developers have the incentive to improve Skillz' bottom line. They share the risk with developers with limited downside, as unsuccessful games will be quickly replaced. And to be fair, I did want to mention a few risks. But to me, mostly they are due to the general stock market as a whole, not specific to Skillz. The first one being the big question mark of the second wave. That's still a very big unknown. Even Jerome Powell, who is the Federal Reserve Chairman, said concerning the economy, it is quote-unquote a long way to recovery. The second risk being headlines and the political season. We just found out yesterday that the White House won't negotiate the stimulus bill until after the election, caused the stock market to go way down. However, today the stock market is up 400 points as I'm recording this video. So at the very least, it's going to cause volatility, which will affect a SPAC stock like Flying Eagle. My first takeaway is that Skillz is not entering the already crowded online sports betting industry, so they're not going to have to worry about competition directly head-to-head of the likes of DraftKings. The next takeaway is the heavy backing. Skillz has venture capitalists, they have investors from professional sports leagues, the owners of the New England Patriots, Milwaukee Bucks, New York Mets, and the Sacramento Kings, so that's definitely a good thing. The next takeaway is that Flying Eagle management includes Harry Sloan, who's involved with taking DraftKings public, and we all know how successful that was. That does it for this video. I hope you guys found it helpful. If you did, please consider subscribing if you haven't already. That said, I hope you guys have a great rest of your day, and I'll be talking to you soon. Take care.